Hi guys, welcome to another HoneyStocks.com weekend analysis for the weekend of the 7th of March 2020. Now, I think the logical place to kind of start is, I know that the market for many of you has obviously been incredibly challenging this week. I know for many of you there's probably a lot of distress out there. There's probably been a lack of game plan. Many of you will have financial advisors that are just telling you to hold on and to not do anything, etc. I think that the message, which has been very, very consistent over the last few weeks, is obviously defensive mode. I think we got a bit of a bounce early on with the market, but what we've seen since then has obviously been a complete breakdown in some of the major indices. For those of you that have maybe been following me on StockTwits or Twitter, you'll understand that there's a few charts out there that are moving absolutely fine. It's just the case, I think a lot of you out there, especially from the messages, the emails, etc. that I'm getting, I think many of you are fixated on the same stocks that you keep going back to over and over again, and you're not being flexible in your approach. Now, that's not a criticism in any way, shape or form, but I think if you've picked up some of the charts that I've been talking about over the last few weeks, which I will highlight, some trends, when one area of the market declines, there are other areas of the market that start to move. And as always, I hope you do get something from this. If anybody has any questions, comments, if there's any tickers, any charts that you feel like I should be considering in the next analysis, please do comment below. I look at all the comments and I obviously pick out charts, etc. And and subscribe, bottom right hand corner, and let's see what the charts are saying this week, guys. Now, before I get into this, guys, as always, please do pause the video, make sure you're comfortable with that. There's not any recommendations, it's all opinion, and whatever you choose to do with this information is obviously entirely up to yourself. Maybe to give myself a little bit of credibility, I think most of you already know this. I'm obviously registered with the CMT Association. Technical analysis is what I'm widely known for, and I'm working my way towards my chartered status at the moment. But as I said a second ago, if you do get some value from this, please do subscribe to us. Bottom right hand corner, there should be a little subscribe button, and please do give it a thumbs up because it does help with all the YouTube algorithms, and it gets my content out there, and hopefully this can help as many people as possible. And if you are somebody that does struggle a little bit, stick around till the end. There might be a couple of options for you. But I think where I really want to start with this week, everyone, is I'm not wanting to say to everybody, look, you should have done this or you should have done that. I think most of you follow my work because you understand that I'm completely objective with my charting. I try to remove as much cognitive bias as I possibly can, and I use technical analysis to facilitate better decision makings with investment process. That's really what we're trying to do at HoneyStocks.com. We're not trying to get complex. We try to use the information to give us that little bit of an edge that we all need. And I know that it's very, very clear for many of you watching. A lot of you will be in distress at the moment. A lot of you will be looking at your 401ks, etc., your current investments, watching them plummet and wondering when the pain is going to stop. Now, I think what I really want to do is just touch on the charts where I think you need to anticipate a little bit more selling action. There are going to be charts that I walk you through where there might be potential to the upside, but you need to be flexible, and you need to understand what's going on with the overall market before starting to jump back into your individual stocks that I'm sure you're all married to. I'm only dating my stocks. I never get married. So let's start off with the S&P 500. The S&P 500, it's very, very clear that if we drop below the lows that we seen a couple of weeks ago, that's going to be a problem. Now, on the way back up, we found resistance at a logical level of resistance. We've fallen away again. Yes, the market's massively volatile. I completely get it. Some stocks are going up, some stocks are going down. It's a complete lottery what stocks are going to go up and what are going to go down. But what we do need to be careful of is, if we break these support levels in the market, we're going to see further distressed selling. That's just the way it is. Now, those of you that are maybe long-term investors, that will be an opportunity for you guys to dollar cost average and do what you like with that one. That's not the process that I have. I'm not a dollar cost average guy. I just like to have very clear risk to reward proposition, and as soon as that downside risk is hit, I'm out. I'm not taking any chances there. But S&P 500, I think that level there below 2850 would be a level of concern for me. Same with tech. We know that tech obviously had a very clear and definitive bounce off the 200 period simple moving average. And again, we're not overcomplicating things. I think if we break below these lows here and break below this moving average level, again, we're likely to see a sell-off in tech. Now, I'm like everybody else. I want to see the market, resume nice smooth uptrends to the upside. But I also know when to get defensive, when to not get too aggressive. For me, this is an environment where I am massively defensive at the moment. So I think that's the level you need to watch in tech. Now, to the other side of that, when we have one area of the market declining, we always have other areas moving. And this is the trend following process. And this is why being married to stocks is dangerous, in my opinion, because we can always reallocate risk elsewhere. And many of our members, our clients, are doing incredibly well on the Treasury Bond ETF, TLT, at the moment. I posted to social media during the week 4 charts that you could consider, and just showing, the areas of the market that you can look at, and TLT is one of them. We've had a breakout above 150. It's absolutely flying, and I'm being asked a lot at the moment whether this is something that you can jump on the back of. Now, for those of you that have followed me for quite some time, you'll understand that I have a process, and one of my edges I consider to be the optimal entry process that I have. So I never go chasing stocks. And for me, this is the optimal entry into the stock. And what we've obviously seen it advance. I'm not going to jump on the back of that when RSI momentum is super high. Yes, it could absolutely run off a little bit more, but I'm not really looking to take that chance. I'm going to wait for a high probability pullback opportunity. So, for those of you that are considering buying TLT at the moment, I think you need to be a little bit more strategic with it. It's obviously an ETF, and a lot of it's going to depend on what happens with the overall market. If we continue to see volatility in the market, then there's every chance that we'll see these defensive plays continue to rally higher. But I do think you need to be very, very strategic with your entries. A lot of you after last week will know that gold was a position that I initiated in. And again, I posted to social media. Again, this is the whole dating process that I have. The trade is thoroughly mapped out in advance. Entry, potential resistance met, I'm out. So thank you very much, Mr. Gold. So for me now, gold is obviously a strategic defensive play in the market. When we have distress in the equities market, we can look to precious metals, to bonds, etc. And for me, it's very, very straightforward now. I'll just be waiting for a break of that resistance or any substantial pullback to a high probability area of support. And I'm quite happy to buy back in on gold, especially if the volatility continues. Now, the individual stocks that I've been asked about this week, obviously there's a little bit of concern. I mean, I love Starbucks. Starbucks has been incredibly good to me in the past, but again, we just need to understand where the danger zones in the charts are. And for me, I think we need to be very, very careful with Starbucks here. I think if we're below this level here, I don't really want to be buying Starbucks. I think the only catalyst for me to buy Starbucks is if we start to get strength to the upside here. And, for me, I would class that as a failed breakdown. And when we get failed breakouts and failed breakdowns, we quite often get fast moves going the opposite way. So I think for me, if you're looking to buy Starbucks, I wouldn't be taking any chances down here, just in case this is a confirmed breakdown. But if we get back in here and we start to rally to the upside, I think Starbucks might well be appealing. Roku, again, I know many of you guys love Roku. It's too volatile for me, but because I'm asked about this 100 times a week, I've included it. Very, very clear support level, and yeah, I think the chart makes a lot of sense. I think you can still be bullish above this level. Below that level, I'm not so bullish, and I think it warrants a bit of close management, shall we say. Amazon, again, very, very clear support levels in place here with Amazon. Again, I think we can still continue to be bullish. I think above, the 1800 level makes a lot of sense. I think you can still continue to be bullish. I think even, above 1700, you could probably still consider bullish. It doesn't, at the moment, offer any kind of risk to reward proposition for me personally to move in and buy the stock. I think what we have to consider with Amazon, yes, it's a wonderful company. I love next day delivery just as much as the next customer, but the chart just doesn't really appeal at this exact moment in time. We obviously had a failed breakout here. Obviously, choose your headline. What was the catalyst for the decline? I think coronavirus is the word of the day at the moment. But I think when we look at the charts, I think it actually helps to filter out a lot of the news, because I think a lot of us can kind of get lost in the news headlines and pandemics and coronavirus, lockdowns. The charts really tell us, what's going on, I think. And I think with Amazon, I think those are the levels to be aware of. Apple has had a monster rally. Yes, last week it obviously dipped a little bit, but the stock is going up. That's the message. Last week, our subscribers and members, clients, were given a brief that just said, look, guys, I think that the market has potentially found support here. I do see a volatile uptrend resuming, and that's exactly what we've seen so far. So there's nothing that's been terribly surprising to me. I think, the volatility, everybody has their own, risk profile. Everybody has their own tolerance for risk. And if you're not comfortable with volatility, if you're not comfortable with the risk the market is presenting, I think the message that I have at the moment is, trading is optional. You can absolutely wait. You might have to give up 1 or 2 weeks of gains, but that's not the end of the world. If the market eventually goes on and creates new highs and has another 10-15% upside, are you really going to care about a few dollars that you could have made on the way back up? So yeah, there's obviously opportunity there. With any pullback, with any correction, there is opportunity. But I think the bigger picture here is this a catalyst for a crash? I don't know the answer to that. Nobody knows the answer. You'll have all I like to call them the glory hunters on CNBC and Bloomberg, calling for crashes, etc. And they'll justify it with every conceivable chart they can find. But the truth is, nobody knows. And we just have to play the charts, and that's where technical analysis comes in. I think if you're out there and maybe you've got the economics background, maybe the fundamental background, strongly urge you to pick up technical analysis, because I can't explain why, but it just works. Netflix. I think Netflix, again, I think the message with this one is very, very consistent over the last few weeks. I think we still remain bullish above this level. Netflix is holding up pretty well at the moment. So if we do get further strength to the upside, you would expect Netflix to follow with that. Now, that leads me on to airlines. Now, I've got a couple of airlines I'm going to be talking about this week. And obviously, Southwest Airlines, I touched on this one last week, actually, because I've been getting a lot of messages about airlines. And again, it does look like this support level has held firm at the moment. Now, I think the issue that we obviously have with airlines is what's going to happen when they start to announce their earnings, etc. Obviously, for me personally, I think I shared last week that, there's a flight that I was supposed to be on to Sweden that I didn't get on just because I'm not comfortable with flying at the moment. And, that might be me just being overcautious, but, I'm quite a cautious individual by nature anyway. But, if that's my view, I'm sure there's many like me. And I'm not sure this is maybe picked up in the US, Canadian press, but, quite a big airline from the UK this week actually went bust. And one of the reasons they gave for that was the recent downturn because of the coronavirus. That the revenue generated from just a few weeks or missed from just a few weeks is massive to the airline business. So, if you're out there with airlines, I do think, it's, cautious time, but again, play the charts. Support levels found with Southwest Airlines. I think you can continue to be bullish above this level, but again, below that level, I think, things can get pretty ugly pretty quick with that one. Again, CDNS, chart that I, loved once upon a time, but again, we're only dating stocks. And I think this is a very key level for this individual stock. I think, again, continue to be bullish above it. Below it, there might be an opportunity to the downside. EHTH has found support after last week. And it's flying. It's one of those stocks that has rallied very, very hard this week, despite the volatility. And the stock is moving. So I think what you probably need to really be, careful of here is, are we, starting to develop some sort of chart pattern here? And I don't know the answer to this at the moment. So, if this level starts to act as resistance, then, that might be something to keep an eye on. Yes, great company. I like the company. That the fundamentals, from what I understand, are pretty good. So, on a technical level, I think this tends to make a lot of sense to me. Twilio, I think it warrants a little bit of defensive action once again. Yes, we've rallied hard recently. This is a trend that, quite a few of our members jumped on and are, have done very well in the past. But again, the stock started to break down. We found resistance, and it looks like it's breaking down again. So I think below $100 here, guys. I think with Twilio, I think you do need to be a little bit more cautious. AbbVie, obviously, uptrend. Yes, recent pullbacks, but again, since we had the correction, and obviously we've bounced a little bit to the upside, the stock has actually held up reasonably well. So I think AbbVie, if you're looking for a strong, solid stock to maybe move back into the market on a technical level, it's very, very clear. I think you're just bullish above this level, and I think below it, I think you just have to start to initiate sort of defensive action. But again, AbbVie, very, very solid company. Nvidia, failed breakout. Obviously, monster move to the downside, followed by an absolutely incredible move to the upside. So I think with Nvidia, again, probably very, very similar to AbbVie, actually. Good, solid company. And, I think any pullback, if we can, demonstrate that support level again, then that might well be a buying opportunity. But again, I think, if we break a trend line that that's historically gone back to August 2019. I think a break of that trend line might well induce a bit of selling pressure. So again, I think it makes sense to kind of get your game plans together if you're technically minded. Salesforce. I think with Salesforce, again, it has rallied a little bit. We've obviously found support at a level you would expect to find support. That's a buying opportunity if you've got an eye on that level. But again, you just have to be mindful of where the danger zones are. Again, I think this chart makes a lot of sense. I think you can continue to be bullish above this level, but again, below it, defensive actions probably needed. Now, energy has obviously fallen off a cliff recently. I think with energy, I think the message is very, very simple. Oil has fallen off a cliff. Now, that's not going to be good news for the oil energy companies. For those of you that maybe didn't pick up on, Brent oil, I think I'm right in saying it's the benchmark. So Brent oil dropped below $50 a barrel, and that just absolutely cratered crude oil, which I think you guys in the US might be more familiar with, which has already broke below $50. But when Brent oil starts to break these support levels, then what we've seen this week, I think 8% drop in oil, which is absolutely incredible. That's not good news for the oil companies. And I think Chevron, for those of you that didn't pick up, a couple of weeks ago I was advocating shorting below $100. That's exactly what we've seen. It's rallied a little bit. We've got a little bit of an oversold bounce. So what we've seen is very, very normal, very, very logical. There's nothing that's unforeseen with this move. But again, I think below $100, I think you want to be a seller of Chevron. Leads me on to financials. XLF is very, very close to breaking down. Now, this support level dates back to 2011. Now, if we see financials, and we obviously seen what happened with financials last week, if we see this level break with an XLF, that's not good news. I think you need to be very, very careful with some of your positions, which I'm going to be talking about in just a second. I think Goldman Sachs has obviously fallen off a cliff at the moment. So I think there's a logical expectation here that, if we see XLF breakdown, I think we probably see Goldman Sachs at least come down to test 180. We know that when we had the last correction in December 18, we got down as low as 150. And again, for those of you that have maybe followed me for long enough, this was a stock that I was advocating shorting once upon a time, and it had a huge move to the downside. But again, I think that's where the understanding of what the overall market is doing, it's most of the time not about your individual stock, as crazy as that might sound to you. So yeah, if the market's falling off a cliff, if XLF is falling off a cliff, you're going to find the Goldman Sachs and the JP Morgans of this world break those support levels. And again, we just need to be mindful. Yes, JP Morgan, we all enjoy stocks when they're going up, but there has to be a point where you have to say thank you very much, Mr. JP Morgan, and on to the next one. But again, I think we're at a very key inflection point here with JPM, and those are the levels that I'll be keeping an eye on. Again, CrowdStrike, this was actually a recent trade alert that I sent out to our guys just prior to the monster correction that we had, and we're still undergoing, I should say. And this is a level that I think we need to be very, very careful of here. I think if we break below this level with CrowdStrike, I think there's probably a bit of selling pressure coming in. Again, going back to the airlines, American Airlines, I think we would expect a bit of an oversold bounce here, but I think that's going to offer opportunity to go short. The only way that I would reconsider that thesis if we break back into this level, and then we'd probably look to buy it because, as I touched on a second ago,
when we get failed moves, we get fast moves going the opposite way. And, I think that would be my thesis here with American Airlines. We've obviously got Match as well. I think very, very clear. We're obviously in a huge sideways range with Match at the moment. So I think there's maybe opportunity here if we can get a sustained bounce to the upside. 50% ranges I enjoy. I like a 50% range. It offers incredible risk to reward proposition. But again, understand where the blind spots are on the chart here. I think below $60 here, and I think that warrants a lot of defensive action. We have recently moved into oversold conditions, which is obviously a bit of a concern there, because those are characteristics of downtrends, not uptrends. So yeah, I think that the chart there for Match makes a lot of sense. And we'll finish off the charting with Win. Again, I think very, very clear here. There's obviously a strong correlation with China, and I think with Win below this level at $90, I think you need to be super careful. I think you can continue to be bullish above this level, but I think below this level, and like I said a second ago, I think it would absolutely warrant a bit of defensive action. So guys, I hope you've got some sort of value from that. Now, obviously, a lot of you will have watched this at the end of each of our weekend videos. But if you are somebody out there that is genuinely struggling at the moment, maybe you're somebody that maybe wants to pick up technical analysis, maybe you want to have access to our premium charting research at honeystocks.com. We're doing a very good offer at the moment. It's being snapped up. We're very, very close now to reaching our 200 members limit. The other thing to maybe just touch on, guys, and I don't know, what anybody's reaction to this might be, but I've always had a plan in mind that once I reach the membership limit, that I would step back from most things social media so that I can enjoy my weekends a bit more. A lot of you won't realize, but for me to be able to put the time in to create these videos, to build the analysis for everybody, to monitor all my social channels, it's actually a lot of work. And for me to present this to you every week probably takes me 10, 12 hours. And I take the view that I could do a lot more with those 10, 12 hours. And I really do hope that a lot of you get the value from this that I obviously tried to provide. But like I said a second ago, I will be stepping back from a lot of my social media in the near future. So for anybody that does want to have future access to our program, at the moment we're giving away full access to our technical analysis program, which has been tested by financial professionals. It's had incredibly good feedback. Our clients are very happy with it. Our subscribers are very happy with it. And you get 1 year access to our trading ideas, our scans, our premium analysis, our trading community as well. I'm also on hand. I've got a very professional setup with my app. So if you need a second opinion on a chart, I'm on hand to provide my chart to obviously go hand in hand with your chart. So there's a lot that I do on a day-to-day basis within honeystocks.com. Obviously, I think for $500 annual subscription, I think the value probably speaks for itself at this point. But a big part of obviously what I do is the trade ideas and the charting requests, etc. But obviously with what I do, I think if you're not familiar with what I do, you can go and check out our website, honeystocks.com, to kind of get a better idea. But one of the unique things about what I do at honeystocks.com is I log every single trade alert that I've ever posted to our subscribers and clients over the last 3 years. So feel free to go and check out the types of stocks that we provide trade alerts on are the types of stocks that you typically like to trade. I'm not a get-rich-quick scheme. I don't trade penny stocks. I'm not looking for momentum stocks that are going to rise from $5 to $50. I'm looking for good quality stocks that have potential to generate really good moves. I think one, that's got a lot of attention recently was the trade alert that went out for ENPH. That was a massive, massive winner for most of our clients and subscribers. I would suggest that, if you can get, 2 or 3 of those moves a year, you're in for an incredible year. So, we've obviously got that one nailed. Yeah, recently, obviously, the couple of losing trade alerts, but, we can't win them all at honeystocks.com. And as much as, we have an incredibly successful group, etc., there are 1 or 2 that might move to the downside. That's just the game that we sign up to. But that's what our trade alerts look like. That's the trade alert for ENPH. That's one previously for Starbucks. Support charting as well. This is one that I provided for AbbVie recently. The HIIQ was a recent one. That's been a massive, massive winner. So again, if you want to come in and be part of a group like this, then these are the types of people that we can, tend to help, and the types that we have as part of the group. I think if you've got a career and a business and you're looking for maybe support charting, maybe you want to, I suppose, do a little bit less work with your charting. I think that's maybe where we come in. And I think if you're trying to get away from day trading, maybe you want better consistency, maybe you want to learn for yourself, etc. Again, those are the types of individuals that we can help, because listen, guys, I understand that I think many of you this week will have been going through a lot of distress. It will affect your work, your home life, etc. And I think if you can give yourself a little bit of knowledge with technical analysis and maybe have, a subscription that just kind of just tells it how it is. I'm not here to sugarcoat anything, completely objective with my data, and you don't have to learn from those losses. So if you're opening to learning a new way, please, there's a link below. Feel free to register your details, and we'll reach out to you. Just make sure that it's a good fit for you. And guys, that's the analysis for you. So from the bottom of my heart, thank you very much for watching, and maybe we'll welcome you very, very soon. Thanks again.